The crypto fear and greed index is at record lows. Every single headline is saying that the bear market is here and everything's about to end. The bears are foaming at the mouth and proclaiming that crypto is about to collapse and we're about to head into a year-long crypto winter. But while retail panic sells, something strange is happening in the data. Policies, for the first time in years, are flipping stimulative. The Fed is signaling a massive liquidity pivot. Japan just turned the money printer back on, and Trump and Bessent are basically telling you at this point that they are about to pump up the US economy in order for the Republicans to win the midterms. I believe that this current bear market that we're in is actually just a liquidity air pocket, a mid-cycle shakeout designed to steal your bags right before the real move begins. In fact, nearly every single big parabolic move up in crypto has started in this exact same way. And so I'm betting everything, literally my entire net worth, every dime I have, that the top isn't in yet, and in fact, the best part of the cycle hasn't even begun. Okay, I know it can be discouraging seeing every single KOL on X and YouTube talking about the bear market being here and how it's all over and it's time to sell and blah, 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 blah. But I'm here to tell you that the bull run is not over and that the current sell-off that we've been going through over the last couple of months has a real clear cause that is at a turning point and about to head the opposite direction. As I've been saying in video after video, this has been a liquidity and plumbing issue mixed with the 4-year cycle narrative and mixed with some other fears about an AI bubble, etc. in the wider stock market. But these fears and this turbulence is to be expected given exactly where we are in terms of easing and tightening cycles. We have been in a multi-year tightening cycle since 2021, and the longer a tightening cycle goes on, the more cracks start to appear in the system. And what you're seeing right now with these liquidity pockets and all these, credit issues and all the craziness that keeps popping up randomly in the economy is this tightening cycle. It is those late stage tightening cycle cracks that begin to form as the system is under too much strain and needs policy to flip towards easing so it can get that liquidity relief. And Julia Patel says it really well in this post, but I'm going to break it down even simpler. Basically, the world doesn't grow the way it used to grow. Economic growth comes from population plus productivity plus debt. Right now, productivity and population growth are falling, and so the way that governments bridge that gap is via more and more debt. And because right now households, businesses, and the government hold a ridiculous amount of debt, the interest payments on this debt, even at normal interest payment rates, is just ridiculously high. And so a lot of the economy's growth gets basically eaten away by these interest rate payments. And when you get to the stage where we are, where there's just not enough economic growth to cover this debt cost, you have to have something else that fills the gap, and that's just more and more debt. And a really easy way to visualize this is just imagine a married couple, and they're both working full-time jobs to cover all their bills, and then one of them gets laid off or they retire or whatever. They get too old to work, let's say. And so now only one of them is covering all the costs of all those bills. And those bills are really stacking up and they don't have enough money to cover those bills. So they take out a little bit of debt to cover some of that cost. And the more and more of that credit card debt they take off, the higher their interest payments get on that credit card debt to where they get too big. And so now they maybe have to go to like a loan shark or a family friend or someone to take out even more debt to cover just those interest rate costs, which keep ballooning. And so they're using debt to pay off debt, to pay off debt, to pay off debt. You kind of get the idea. Without that second person in the family working to cover the cost of those bills, the only way for them to keep up is to take out more and more debt. Obviously, this is a little bit different with governments because they can print money and do a bunch of other crazy stuff. It's so they have a lot more leeway in this area. And basically where we've been over the last couple of years is back in 2021, let's say the married couple realized, wow, we cannot take out any more debt. This is getting absurd. Like we just can't do it anymore. So they just let the bills start piling up, and they let it pile up for 1 year and then 2 years and then 3 years. And now they have like people coming after them. People are seizing their assets, and it's just getting super crazy. That's basically what's happening in the global financial system. We've been tightening since 2021. We've been saying, hey, we're going to be fiscally responsible. We're going to do the right thing. We're going to crush inflation. But the system has too many cracks at this point. And as those cracks continue to grow and get bigger, policymakers are basically forced to say, hey, we have to take on more debt. We have to flush more liquidity into the system. Otherwise, the entire system is going to break. And that's basically basically what's happening right now. But basically, unlike the couple who, eventually would just have to file bankruptcy, the US government is never going to file bankruptcy. They're just going to devalue the US dollar infinitely to cover these gaps. When you have $38 trillion worth of debt, you're just never going to, build your way out of that. And as I highlighted in my last video, Americans are defaulting at a crisis pace. Student loan serious 90-day delinquencies hit a record of 14.3% in Q3 2025. Auto loan delinquencies are at 3%. Credit card delinquencies are 7.1%. This is the highest since 2010 for the auto loans and near a 14-year high for the credit card delinquencies. Also here, breaking U.S. foreclosure rates surged 32% year over year. Also, as I highlighted last week, 600 plus large U.S. companies have gone bankrupt this year, the highest rate in 15 years. And policymakers are taking note of these cracks in the system. As Joseph Wang points out, last week's tumble looks more like a correction than a change in trend. Monetary policying is easing, and other policies look to turn stimulative ahead of the elections. Despite all the changes, foreign and domestic investors still love U.S. assets. And another example of policies turning stimulative, Japan just approved like a crazy stimulus package. And as Fred points out right here, Japan is about to flood their system with liquidity. That's going to force the U.S. to do the same. And obviously, I can also highlight the fact that we just had 2 rate cuts, and now the odds for a December rate cut are surging. We're back up to a 75% chance that we see a 25 basis point cut in December. Plus, we're going to see the end of QT in December. So policies are clearly flipping from tightening into easing. They're flipping towards stimulative. And to make it even more simple and just stupid obvious, I put this post out on X where I said it really is this simple. If people feel poor going into midterms, the Republicans will get decimated. Trump's only job is to now make everyone feel as rich as physically possible next year. Trump does not do things small. Expect the money printer to go into overdrive in 2026. Republicans will have to choose between losing power or winning while also making everyone happy with free money. Short-term thinking will win out. Trump and Bessent have already been positioning the Fed, not really a secret. They're literally telling you they want to do 2K stimulus checks to everyone summer of next year. It also just happens it's time to ease. We've been in a tightening cycle since 2022, and the system is throwing warning signs left and right. It's time to flip policy. Everything is coming together for an epic bull run in 2026. Fade at your own peril. And that is really kind of the point I'm trying to make here, is that if you look at everything in together, it's just like perfect time. It's absolutely perfect timing where you have things flipping from a tightening to an easing cycle. They're flipping from being, responsible to easing and just going crazy. At the same time, incentives are aligning perfectly where we're going into midterms. We have Trump and Bessent who have been preparing for this for an entire year, and they want to flip pro-stimulative. They know that's the only way. That is the only way the Republicans win the midterms, period, straight up. It's a pretty dire situation for the Republicans at this point. And so the only way they're going to win this is by making people feel rich, because that's the number one single biggest issue right now. That is what everyone cares about in the US. Every single person is like, hey, you know what? My life kind of sucks and it keeps getting worse. And you know what? Somebody's responsible for this. So whoever, whatever side promises me to make things better, that's who I'm voting for. And we're already seeing this play out in elections across the U.S., where you're seeing people like Mondami winning in New York, basically promising to make everything cheaper and easier and everyone richer. And that's what people want to hear right now. That's what people, obviously it doesn't work like that. Obviously, it's way more complex than that. But that is what's going to win this next election. And we know Trump likes to go out swinging. He likes to go big or go home. This is the guy that just gave us, Liberation Day with the most insane tariffs we've ever seen. What do you think he's going to do when he flips into midterms mode, as I'm calling it? When he flips into this pro-stimulative, I'm going to make everyone rich kind of policy, I think things are about to get far more bananas than people expect. I think they've been playing this smart. They've been playing this for a long time. That's why he's been on the Fed, because the Fed is really the key, okay? If they can't get the Fed in line, it's going to be a lot harder to do what they need to do. But the thing that they have going for them is that we're flipping from a tightening to an easing cycle. At the same time, the financial system is saying the same thing, okay? And so basically, they're kind of going with the flow versus working against the flow. And just kind of throwing gasoline on the fire. And already Trump is throwing out some crazy proposals. We've already talked about the $2,000 tariff checks for midsummer next year. He's talking about portable mortgages where you can keep your mortgage rate but transfer it to your new house. All kinds of just wild and wacky things that I don't know that all of them will stick, but this is what I'm talking about. He's going to shotgun blast all these ideas and crazy things. And if it's stimulative, it's good for us. It's really, really good for our banks. By the way, a little bit later in this video, not that I really think anyone is interested at this point, I am going to highlight some of the things I am buying during this dip. I recognize most people aren't buying right now. Nobody cares to buy. But for those who are interested, I am going to talk a little bit about that a little bit later in this video. So while I don't know what's going to happen next week with price, right? I don't know, right now there's this whole, people are freaking out about the 4-year cycle and they're selling off, which is like so stupid. It's so stupid. They're wrong. I'm like just telling you flat out, they are wrong about this. This is such an obvious bear trap. I don't know, if it's over this week. I don't know if it's over next week or whatever, but I can tell you we went through a liquidity air pocket. That's done. That's on the mend. I just know all the incentives and all the stars are aligned for 2026 to be absolutely unhinged insane in terms of liquidity and easing, which means it's primed to be absolutely unhinged insane in terms of our bags and an epic crypto bull run. And as I've said before, I think 2026 is going to be what most people expected out of 2025. And the one thing I like to keep reminding people is that when it comes to crypto specifically in terms of bullishness, it is never, ever in the history of crypto been more bullish. The institutionalization of crypto has been absolute, out of my wildest dreams, could not imagine a situation that is better than the one we're in right now when it comes to all of that. Matt Hogan says it really well right here, where he says the worldview of what crypto can do is evolving. A few years ago, the only thing mainstream investors would consider was digital gold. Now folks have accepted that it's digital gold plus stablecoins plus tokenization. In a few years, they'll realize it's digital gold plus stablecoins plus tokenization plus prediction markets plus DeFi plus digital identity plus privacy plus DePIN plus capital raising plus decentralized AI plus more. In this post from Hunter Horsley says, this is the CEO of Bank of New York Mellon, the oldest bank in America, the largest custody bank in the world, $53 trillion, one of the most widely used service providers in TradFi. Hard to imagine a simpler, clearer indication crypto is going mainstream. It's underway now. Buckle up. And in the video, Robin talks about how tokenization is a mega trend. And here's a post from Joe talking about how boomers are sitting on 85 trillion in wealth. And I really wanted to just highlight this for a couple different reasons. For one, the thing is about the older generations is eventually they will pass away and that money will be inherited by younger generations who are far more likely to invest it in crypto, Bitcoin, etc. The second reason I want to highlight this is exactly what I was just talking about. Institutions are now on board with crypto and they are massively legitimizing it in the eyes of the baby boomers. That's what they listen to. They listen to the news. They listen to these guys in suits. Whatever they say is right. That's what's right. That's their source of truth. And so not only are they telling them this is the future, you got to buy it, this is going to be huge, but they're also making it available for them to buy via these ETFs and different products that this baby boomer generation can now invest into. And that's where I've talked about before. A lot of these ETF flows are actually retail flows from this just massive pile of wealth from the baby boomer generation. And I expect this to continue to accelerate year over year over year. If everything else, no easing any of this stuff, I would still expect Bitcoin to have just a pretty incredible year next year, just based off these ETF flows alone. This is a lot of money. This is a crazy amount of money. The entire crypto market cap right now is around $3 trillion. Okay, so this is just one generation sitting on just a vast amount of wealth that now has a direct pipeline into crypto as an asset class. And right now it's mostly just Bitcoin and ETH. But as time goes on, as we get more and more of these altcoin ETFs, you can expect that to expand as well. And so I'm buying a couple different things on this dip. The first one I talk about all the time, it's Avo. I'm going to go more in depth in a future video on all these things. But if you guys have watched any of my videos, you guys have probably heard about Avo. I have a couple different videos where I really go into my bull case for Avo. And they've been really building during this dip. Their indexes are almost ready. Right now, they just have one index launched, and that's the Jupiter Top Organic Activity. It's up 44% over the last 7 days. Historically, most of their agents have just been wallet tracker agents, but their next phase of rollout should massively expand. I think what people kind of think of when they come to this platform, which is the rollout of their indexes, et cetera, the reasoning agents, et cetera. And I'm just really bullish on this project. And you can see even on the roadmap, the next up is the narrative index expansion, enhanced trade logs and transparency. They're working on a mobile app and a ton more. It's still just really early days for this project. And, most people forget they've only been around for 4 months. And I think in, those 4 months, they've done more work than a lot of these projects that have been out for years. Second thing I've been buying pretty aggressively right here is RSC or Researchcoin. You guys know that I'm insanely bullish on this token. Brian Armstrong is the co-founder. He's the CEO of Coinbase. He's the founder of Coinbase. He's a billionaire. And if we get any sort of alt season, if I'm right about that at all, I just don't see how RSC doesn't go just absolutely parabolic. That is my personal thesis, and I've sunk a lot of money into Researchcoin. I've been talking about it for a long time. As I like to point out all the time, Brian Armstrong even has it on his bio. He's the co-founder of Research Hub. But something kind of cool coming up is SciCon 2025. And that's going to have Brian Armstrong talking with Patrick Joyce. I had him on a podcast a while back. He's the co-founder of Research Hub as well. And if you remember last year when this happened, where you had CZ and a bunch of guys talking about DeSci, it really kicked off things for a lot of these DeSci tokens. And so, that could be possible this time around as well. But either way, I think RSC is one of the most obvious bets. And I'm happy every time this thing dips, I'm happy to sink capital into this token because I think it's going to go a lot higher from here. The third token I've been buying during this dip is Akash. I know I haven't talked about Akash in a long time, but that doesn't mean I've stopped being bullish about it. It's just been pretty high. But since then, it's come back down quite a bit in terms of price. And so I'm happy to buy it at this price, no problem. Think of it as like the NVIDIA of crypto, the decentralized NVIDIA. I don't know how, whatever way you want to spin the narrative. You can call it decentralized AWS. Like the narrative alone for this thing is absolutely insane. But what's more cool to me is like this is a real team building a real product that has real usage behind it. And as they call themselves, the decentralized cloud built for AI's next frontier. This project has just gotten better and better and better year over year over year. And so I think they're going to continue to grow. I think they're going to continue to get better. They put a lot more emphasis on AKT over the past year. And as I've talked about over and over again, I think AI crypto projects are just going to go absolutely parabolic if I'm right about alt season next year. And so this is definitely one I want to own more of. And finally, I have a brand new one for you that I have never talked about before on here, and that's Infra. And this is another AI project currently sitting at just 1.4 million in total market cap. And their tagline is infrastructure that powers intelligence. One platform for all your AI infrastructure needs. Access 100 plus AI models, store vector embeddings, and build RAG applications, all from single unified dashboard with transparent pricing. And I am insanely bullish on this project. I know the core dev behind this project, who he is. He is an absolutely goated AI dev. I found out about this project from the main dev behind Avo, and he said that this guy is just unhinged in how good he is as a developer. And I've seen it. Like, he's been shipping features that have taken other teams millions of dollars and months to ship, and he does it in like 5 hours. I actually don't understand how this guy is so good. He just recently released a Deep Research Agent, which is like if you ever use Deep Research feature on Gemini or ChatGPT, it's a feature like that built for infra. Think of this as like a backend suite for projects to tap into. So they could tap in the Deep Research Agent. They could tap in the infrastructure that's being built. They recently launched this thing called Observer, which is their newest agent in the infra stacks. Think of it as ChatGPT's brain plus a 24/7 market news watcher wired straight into your APIs plus dashboard. You tell it what to watch, it pings you only when something actually matters. He built his own cross-chain bridge on Solana to plug into his infrastructure. He built his own swap aggregator, kind of like Jupiter, to plug into his infrastructure. And the end goal is each of these pieces is being built for a purpose. Imagine an infrastructure custom built for agents. Like the swaps are custom built for agents. The bridge is custom built for agents. They can tap into this deep research feature. They can tap into this observer feature. All these different things are pieces of the puzzle for kind of like the ultimate vision and goal of this project. And again, this is brand new. This is like very, very, very early stage. There's still a lot more to get done. This project came out, I think, for sure less than 2 months ago. Brand new. And it's still really, really tiny. It's still sitting at 1.4 million in market cap. So max risk, this is like a VC seed invest. Like, you put that money in, you don't know if you're getting it back or not. But if it does work out, in my opinion, it is a perfect asymmetrical bet in the sense that the upside potential, especially given its AI roots, is astronomical, which is why I put a ridiculous amount of money in. It would hurt to lose the amount of money that I put in this project. Like, don't get me wrong. I would not be happy in that sense, but it's kind of a bet I couldn't pass up on because of how good the developer is, because of how fast he ships, and because overall it tapping into the AI narrative. That's it for now. I've probably deployed about 50% of my funds during this dip so far. I have the other 50% left over, kind of waiting to see how long this dip lasts. I still have some planned buys for things like Persona, etc., which they just shipped a really cool feature. Basically an AI generative platform directly for holders. It's just a small piece of the puzzle of what they're ultimately building out as well. So I do want to scoop up more UNA, although I do already hold a lot of UNA, which is why I'm not as quick to jump in and get more is just because I already hold a lot. The links to how to buy all these tokens are in my description for the few brave souls willing to try to time the dip. As always, none of this is investment advice. None of this is me telling you to do anything with your money. I'm obviously not your financial advisor, and you should always do your own research. And if you're curious about seeing my entire portfolio, or you want to see every time I buy and sell various tokens, as well as different weekly video market updates, currently the Obsidian Council is closed to new members, but you can sign up for the waitlist in the description of this video. If this video is helpful, make sure to hit that like button. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.